Hi, everyone. Thank you for joining us. We are live. My name is Gina, and I'm here today to talk with Ken New with Pinnacle Financial Wealth Management. Ken, how are you?
I'm doing well, thank you. How are you today?
Good. Well, I've been better. For everyone watching, Ken was just bragging to me how warm it is in Florida today, and I'm currently in Michigan. So,
Your day will come.
yes, our day will come soon. Well, Ken, thank you so much for joining me today. For everyone watching, again, we will be discussing alternative investments. So, Ken, let's get started. What are alternative investments?
So, yeah, the general definition of an alternative is really an investment that doesn't fall into the basic conventional categories like stocks and bonds in the traded markets. So they're not publicly traded. And again, that's stocks and bonds, cash. Those are traditional investments. Alternatives are not. So an example of an alternative investment generally is private equity. It could be private real estate. It could be private debt. It could be things like commodities, cryptocurrencies, hot item these days. People like to learn about that. It could be in art and antiques. So that's kind of a generality with that. That one of the things about alternatives versus the public markets is they're generally illiquid. All right. So it's the process is you take your money, you put it with a private investment organization, and they have an investment thesis that they're going to execute on, and they're going to use your money for a period of time. Whereas the public markets, well, you can get the money in and out of there every day, depending on how you want to go about doing that. So the difference between the two, the publicly traded market and the private markets, which generally are what alternative investments are in, is they're not correlated together, meaning that there's volatility in the stock markets, but you wouldn't necessarily see volatility in the private investments because they're not they're private, they're not being publicly traded, so on. So kind of another way to look at it is, it's a way to diversify your portfolio. A private investment can create some diversity that you don't have in traditional stocks and bonds. Traditionally, they're going to be in hard assets. It could be in things like gold, oil, real estate, certainly. And they do generally give you a hedge against inflation. So, which is kind of one of those key things that we're talking about today. Is that now the typical private investment is going to go to institutional people as well as the accredited investors. However, there are some private investments that are available to non-accredited, kind of the everyday investor, so to speak. So I guess generally what I would say is that we think of private investments at our firm as being in private real estate, private equity, and private debt. From there, we kind of expand into what that means. So on the private real estate side, you'd be looking at things that might be invested in multifamily, could be invested in commercial real estate, it could be invested in data centers. A lot of storage centers. They're extremely popular. Amazon's buying a lot of them up all over the country, and in many places, what's happening is there are firms that will build those and then lease those out. So that again is a very strategic move on their part. And so again, they're going to be illiquid, generally speaking. So again, it gives you a basic idea of what an alternative investment is.
Amazon, always ahead of the game, right?
Yeah, and many of them, just like the Amazon. Amazon's kind of the key name that people hear, but gosh, it could be Walmart. It could be many other carriers that need to have that ability to deliver on demand, that last mile kind of thing. So.
Right. So, Ken, why use alternative investments?
Well, I think one of the biggest reasons we would put an alternative into anyone's portfolio is for the diversity. Again, when there's volatility in the publicly traded markets, that creates some angst for an investor. And for an investor who has traditionally transitioned to the retirement world, then they're going to be in the equity markets, they're going to be in the debt markets, and they're going to see the values of those holdings going up and down. They're going to vary, and if they're taking income from it, then very often that income can be affected. In the publicly traded markets, it can change dividend payouts, as an example, depending on market conditions and so on. So that diversity from that traditional market gives us the opportunity now to fix an asset, fix the payout. Giving an example, in multifamilies, very often they're going to issue that to our investors as a preferred stock, which is an advantage because now we have this real high degree of certainty that that payout is going to happen on a monthly basis, just as the contract would say. So if it pays 6 or 7% on an annualized basis, then we know we're going to get that $500 a month or whatever that particular number works out to be every month, like clockwork. And not be subjected to the volatility of the market. So there's diversity really on the income side, and there's diversity on the traditional asset holding side as well. So that's one of the biggest reasons is really that volatility.
Okay. So are there any dangers of alternative investments?
Well, yeah, of course. Every one of these investments, it's always interesting when we think about investing, period. Whether investing in a public market or investing in a private market, the biggest difference between the two is the illiquidity risk. All right. So if you're in the public market and you just don't like what's going on, then you can get out any day of the week you want. But if you're in the private market and you want to make a change, that asset is generally going to be illiquid. And that's really in the structure of the investment. In other words, how you own it. So if you own it as a preferred stock, you'd have an option to be able to convert it to the common stock and actually sell out of it. So that's an exception to that rule. But if you've taken on a position where the organization has borrowed your money and they hold it as a bond, and it can be a senior secured bond. So it can have a lot of security to it, and it can have the senior position. And what that means then generally is you feel like you're in a pretty safe position, generally speaking, with that asset because there's a lot of certainty to it. Again, not fully guaranteed, but there's certainty to it. But what if you need to get the money out? Well, it's still illiquid. So, again, one of the biggest dangers, if you will, or one of the biggest differences for a traditional investor is the illiquidity risk associated with it. And then, of course, there are other risks, economic risk, geopolitical risk, all those other risks still have to be factored in. But again, the biggest is illiquidity. And then, of course, right alongside of that is the ability for that organization to execute on their thesis, their game plan. Are they going to be able to build that building and lease it out and then ultimately sell it in real estate? And if they've taken on a 2 or a 3 or a 5-year debt, are they going to be able to execute on that business plan and then ultimately return the capital to the client? And one of the ways that I try to mitigate that is, I'd like to see my clients get paid every month. And what that means then is that, your capital is put in a place where it's doing its job, is producing income for you, which can be reinvested if you want it to be growth. But the point is you don't have to wait for something to happen. Like in the traditional market out there, you're really looking for price appreciation in the stock because the dividend's generally going to be lower on the lower range, maybe average 3%. So if that's the case, that may not be enough to outpace inflation. And so the point of it is that if you're getting paid every month and you're getting paid 6 or 7 or 8% on an annual basis every month, you're taking money off the table right away. It's every month coming out of there. So that's one of the ways that we try to mitigate that overall risk.
Well, we talked about the dangers. Let's flip it around and bring on the positive. What are the benefits for alternative investment?
Well, again, I think one of the main things an alternative investment does is that it gives you access to investments that you typically don't have access to. It still amazes me. People will own a mutual fund and we may get into a conversation about it. I'll say, well, what does it own? What does it do? And they really don't know. They don't exactly know what it's doing. And that may not be important. But the point is that if you have a portfolio and they all pretty much are doing the same thing, owning tech stocks and owning the S&P 500 as an example, then you've got a lot of risk. I mean, you've got everything concentrated in the stock markets going up. And remember, we had a lost decade. It's a while ago, over 10 years ago now, but from the year 2000 to 2010, the equities didn't produce a result. I mean, it was, from start to finish, you didn't get anywhere, and a couple of market crashes in between. Now, I don't know if we're going to see that again. There's, at least a 50-50 chance. There's some kind of odds that could happen. That would be disconcerting, of course. But the point of it is that there are other alternatives that give you an opportunity really to get involved in investments that you wouldn't otherwise know about. Like we were talking about with multifamily, which in real estate world, it is the top performing real estate sector over the last 40 years.
Yeah.
It now doesn't mean that every multifamily unit does its job and produces a result, but those that are good operators, they're going to have a higher than average or ordinary chance to be able to produce exactly what it is they're trying to accomplish. And why is that? Because people need housing. It's at the top of the list.
Right.
And so it puts it in really, and we're expanding economy, we're expanding population, and all these factors kind of, the runway that you look at is like, this is going to go on for a while.
Mm-hmm.
So, if you can get access to those directly in a real estate venture, then there's a very good chance that your returns are going to be heightened and you're going to be rewarded on a risk reward kind of scenario.
Yeah. And like you said, with the population increasing, there's new development everywhere.
Yeah, absolutely. And just to accentuate the multifamily as an example, they're going to concentrate. They're not going to show up in every town and build a building and think it's going to work out. They're going to concentrate on those what they call net migration states. Mm-hmm. And all that means is more people are moving there than moving out. And the economies are expanding. So, it's going to be places like Florida and Orlando and Tampa, Florida, or Atlanta, Georgia, and Houston, Texas, Nashville, Tennessee, Memphis, Tennessee, Charlotte, North Carolina. I mean, these are economies that have a great need for these kinds of projects. So when you've got an experienced operator and that's where the projects are at, your chances are heightened that they're going to be able to deliver on the promise that they made in the contract.
Yeah, most definitely. So who would an alternative investment be good for exactly?
Well, typically they've been made famous. I mean, we followed a model that has been produced by the endowment funds, in particular the super endowment funds like the Yale and the Harvard endowment funds. And specifically, Yale's fund has made headlines year over year over year under David Swenson's guidance there, and they hold a high degree of alternative investments, and they do it for the very same reasons that we do it for our clients. So when you think about what it would be ideal for, it's really someone who looks to outpace the typical inflation model, economic models, and then some. So the point of it is that providing income and providing growth simultaneously is going to be important to a retiree. And ultimately important to any investor is to be able to get, paid, be able to get the growth on it. And so that makes it really ideal for those kind of 3 to 5 year cycles where you're looking to drive income and create some growth. And in some cases, it could even benefit someone who has a longer cycle, a 10-year cycle as an example.
So can anyone invest in alternative investments, Ken?
Yeah, the investments are typically going to go towards that institutional investor and the accredited investor. And so accredited investors are a primary target for many, many alternatives and best suited there. However, even some of the non-accredited investors, in other words, someone who's worth less than $1 million, they also have access now to funds that are very suitable to them, that have very nice returns as well. Still have the illiquidity risk, that's associated with it.
Right.
But the point is that, yeah, there's many investments nowadays. Now, give you an example. Cryptocurrency probably wouldn't be a good investment for many people, even an accredited or a non-accredited investor, and as well as art or antiques or things like that.
Mm-hmm.
However, a venture into real estate with $25,000 or $50,000 that requires that you be into that for anywhere from 3 to 5 years, that might be suitable for a non-accredited investor. So, again, it depends on the investment. And but again, typically institutional investors and the accredited investors, however, available also for the non-accredited investors.
Maybe in the future, Ken, we can go live and talk about cryptocurrency.
Yeah, we're doing a lot of that work nowadays because people are just really interested in how it works and what makes it work and so on. And it's a huge sector of our industry now. So we need to catch up and figure out what it's doing.
Yeah, because it's everywhere, like you said.
Yeah.
So how does Pinnacle Financial Wealth Management strategize alternative investments into client portfolios?
Yeah. So Pinnacle Financial Wealth Management is my firm. And the broker dealers that I work with are Center Street Securities as well as Arete Wealth. Uh-huh. And so they have a investment committee. And so what happens is that there are many of these, thousands of these ventures that many of the sponsors would like to get on our platform. And so their primary focus is to do the due diligence that's necessary to be able to understand the investment, how it works, check out the backgrounds of the sponsors, to look at the financials and vet those and see that they're certified and so on. And what happens through that process is many get weeded out. And we distill that down. We have about 122 different options on the platform at this point. Some of them come and go, but the general thesis is still there. There's always going to be some real estate deals. There's going to be some debt deals. There's going to be some private equity deals. And so as that process starts to work out, the broker dealers will then provide that information to us. Then I do my due diligence, meet with the sponsors, either virtually or in person. I get an idea of what they're doing, get an understanding of what they're doing. And then very often, those sponsors will be either live here in front of some of my clientele to explain what it is before they invest, or as updates. And we have updates every single month about many of our holdings that people have been invested in for years. So it's not just getting into it, it's also following it along. How did it do through COVID? And that's a great acid test, for someone when they say, well, how does this alternative investment work? And I said, well, let's go back and see what happened during 2020. Okay? Specifically March and April and May of 2020, what happened there? Oh, they paid their bills. Okay, they paid their dividend. There was no loss in values. We can see, and that's just a great way to kind of check somebody out now on how it is that they were able to perform during, what we call a black swan event. It just came out of nowhere, and here it is, and affected a lot of people. We shut down the economy, and the investments held up very, very well. So again, that's the process that we go through, and then of course, prior to that, just talking to the client and finding out what their objectives are, and kind of working through that whole process. So alternative investments are a tool. The real magic is in the financial planning, and that's the interplay between the investor and the advisor, and getting a thorough understanding of what they're trying to accomplish, whether it be income related, growth related, a combination of both, what the tax implications are, what the estate planning pieces are that are necessary. Look, I've been doing this for 25 years. So every piece needs to kind of work through a process so that the end result is what we're looking to accomplish. So there you have it.
Awesome. That was a lot of great information, Ken. Thank you so much for answering all my questions. And like always, as I always say, continuously educate us on your world, which is the financial world, right?
Yeah, happy to get on and have a chat. I just know it goes out to the virtual world out there, and so everyone can get their take on what this opportunity is. And yet, if it works, I mean, there's a lot of opportunity out there in the alternative investments. I think it's one of those misunderstood assets.
Yeah, absolutely. And just getting that information out there. So for everyone that is watching or will be watching, click on the link above, get a hold of Ken, discuss alternative investment and how it could benefit you. And once again, Ken, thank you so much for your time.
Thank you for the time. Absolutely.
Enjoy
Have a great day today and stay warm.
Oh, Ken, really quick, you did talk to me about a quote.
Oh, yes.
So it was so great. I wanted you to share it with everyone.
I'll put it in here at the end in our discussion. We were kind of talking about the idea of the illiquidity of an alternative investment. And so Warren Buffett made famous a quote that said, if you're not willing to hold an investment for 10 years, then you shouldn't invest in it for 10 minutes. Mm-hmm. And so that's kind of a way that, the professional investors, if you will, look at investments is that, and that's the beauty of an alternative, is if you're getting paid along the way, then you can have the patience to hold it longer. If you're not getting paid, then, where's the reward? And so, if you're not willing to hold it for 10 years, don't invest for 10 minutes. Quote by Buffett.
And it fits very well into the topic discussed. So.
Absolutely. Thanks for reminding me.
Yeah, absolutely. We'll talk soon.
Okay. Thanks a lot.
Thanks everyone for watching.
Bye for now.
Bye.
Bye-bye.